But what's really important is 2023. The front end of the yield curve is pricing already some hikes by the ECB in 2023. So if inflation is not at target by that time, either the front end of the yield curve has to come down, or if inflation forecasts are revised higher, then expect more repricing of short-dated interest rates.
If the central bank does upgrade its forecast today, how do you see Madame Lagarde explaining why it makes sense to keep the pandemic emergency purchases at this elevated level?
Well, I think the same way as they justified that decision 3 months ago, actually. The ECB is willingly behind the curve when it comes to withdrawing accommodation, and they'd rather see that being done too late than too early. In the word of some ECB officials, the risk of withdrawing accommodation too early far outweighs that of withdrawing it too late.
But Antoine, what about if you look at it from the framework of financing conditions? We know that that is almost exclusively what the line that the president gives every time she's asked about rates and monetary policy decisions. They want to keep financing conditions favorable. Since the March meeting, and I'm going back to March because that's when we found out about the significantly higher purchase rate, 10-year bonds are about 20, 30 basis points higher. How would you describe yourself financing conditions right now? Are they still relatively loose, or are they getting towards tight territory whereby, in that case, the ECB were justified with continuing at this higher purchases of PEPP for the next quarter?
Look, it's very difficult to know exactly what the ECB means by favorable financing conditions. And I think to an extent it's on purpose. I hope you have your bingo sheets or bingo cards ready for the press conference, because they tend to use a lot of very complicated words to explain, but in my view, confuse the situation a little bit. So my personal assessment, financing conditions are still extremely easy. If you look at outright yields, when you look at spreads, when you compare that to inflation expectations, when you compare that to the firming of the recovery, and a lot has changed since March. Remember, in terms of economic recovery, in terms of economic confidence. So, in my view, they could get away completely with reducing purchases a tiny bit now. The reason why they're not doing it is because they think there's a decent risk of them creating a market panic, increasing volatility, increasing instability, and eventually this could feed into tighter financing conditions for the economy. But as things stand now, they are fairly accommodative.